a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hello everyone, we are talking about the top performing single country ETF today. Now we all know that emerging markets have been struggling this year thanks to increasing interest rates in the US and a strengthening US dollar. But Saudi Arabia ETF is an exception. Saudi Arabia stocks have been surging this year, and we'll look at the reasons why and whether this trend can continue. Now, this country, Saudi Arabia, was recently upgraded by the index provider MSCI to emerging market status. Saudi Arabia stock index would be included in the MSCI emerging market index in 2 steps next year in May and August of 2019. And before that, in March, Saudi Arabia was upgraded by another index provider, FTSE. Now, Saudi Arabia's stock exchange, it's called Tadawul, I hope I'm pronouncing it correctly, is the largest stock exchange in the Arab world. It currently has a market capitalization of about $520 billion. And these upgrades by MSCI and FTSE would result in inflows of billions of dollars into Saudi stocks. Now, this country, Saudi Arabia, it's an oil-rich country. It's one of the richest countries in the world. It is a high-income country, but as of now, it has a lot of dependence on oil. Oil currently accounts for about 43% of Saudi's GDP. Now, the government is trying to introduce many reforms under Saudi Vision 2030 plan, and they are trying to diversify the economy away from its dependence on oil. That's why they are implementing many financial and structural reforms. And they are also planning an IPO of Saudi Arabia's state-owned oil company, Aramco. This company is estimated to be worth about $2 trillion, and the IPO would be about $100 billion, and it would be the biggest IPO in history. Now, Saudi Arabia's Aramco IPO is also going to be good for Saudi stocks. That is another reason why stocks have been doing well. Now, in addition to financial reforms, the country is also undergoing a lot of social and cultural changes. Like recently, they allowed women to drive, which was a big step, a big change in the country. So initially, Saudi Arabia index would be about 2.6% of the MSCI emerging market index, but it would change. The weight would probably go up after Aramco's IPO. Now, let's take a look at the ETF. It is called the iShares MSCI Saudi Arabia ETF. The ticker is KSA. And currently, it is the only ETF focused on Saudi Arabia. It's a market cap weighted ETF, and because the stocks have been doing so well and the ETF is up about 22% this year, its assets have ballooned. They are up about 1,700% this year, making it one of the fastest growing ETF of the year. You can go to Zacks.com quote page for KSA and learn more about this ETF. As you can see, it has an expense ratio of 74 basis points and has a dividend yield of 2% currently, which is not bad. You can also go to the external home page, the iShares website for this ETF, and you can look at further details about the performance, and you can also look at the holdings. As you can see, these are the top holdings as of now. It's a market cap weighted ETF, as you can see from the weights. Now, one thing I wanted to mention is that most investors would think, since it is a Saudi Arabia ETF, probably it would be dominated by oil stocks and it would be correlated with the performance of oil. But that is not the case here, because most of the oil resources in the country are currently owned by the royal family. So that is why the ETF is actually dominated by financials and materials, which you can see over here on the sector breakdown page. Financials account for about 41% of the portfolio, and materials account for about 34% of the portfolio. And as I said, this is going to change after Aramco's IPO. Now, on this slide, I have the comparative performance of the Saudi Arabia ETF, ticker KSA, and the S&P 500 ETF, ticker SPY, and I've compared that with the performance of the broader emerging markets ETF, ticker EEM. So KSA is up 22%, the S&P 500 ETF is almost flat this year, and as I mentioned, emerging markets have been facing a lot of headwinds this year, so that's why the broader emerging markets ETF is down about 10% this year. That's it for now. If you want to learn more about this ETF, please visit the ETF section of Zacks.com. Thanks for watching.